Hey everyone, welcome to another global macro update. In this video, we're going to be covering some fundamentals, just some news articles that we did look at over the weekend. Obviously, there is some stuff to go over, and then we're going to get right into the charts, looking at some indexes, FX pairs, and then ending off with some metals. First things first, we do want to look at China potentially seeing a V-shaped recovery, but don't expect that to be a global norm, analyst warns. So we do see that China is picking up. Obviously, we do have to take their numbers with a grain of salt. Not everything that they are promoting or expressing as fact is actually going to be real numbers. So we do have to keep that in mind. But China is definitely seeing a lot quicker of a recovery compared to a lot of other countries. We can see private survey shows China's manufacturing activity unexpectedly expanded in May. And this is, to me, somewhat surprising because a lot of the deglobalization will be taking a lot of manufacturing out of China, but we don't really know the extent to which companies will be taking manufacturing out of China. Maybe it's a lot cheaper. It's more efficient when it's done over there. They already have the supplies, the manufacturing, the building, all that stuff. So, we'll see how it goes. Obviously, with this pandemic, companies are definitely looking to create more things in-house because obviously with the worry of getting parts from all over the world, it's going to be difficult to try to kind of create a product if you're getting parts from all over the world. If airlines aren't working properly, it makes sense to try to make it all in-house. And this is a little bit of a worry for China, but clearly their manufacturing isn't taking too hard of a hit as of now. We can see right here in a post-coronavirus world, China looks set to grow while the rest of the world contracts. Now, what I'm kind of leading to is the worry that I have within the tension of America and China, because we see statements like this. We see China doing better than the rest of the world. We see China's economy, being able to curb COVID and get back on its feet, while a lot of the economies around the world are unable to do so. And I think what we will see later on is this even taken to a greater extent. And we can see right here, this is kind of the American side. We did talk a little bit about China. We obviously didn't dig deep into the details, but just headlines kind of give a rough understanding of what the consensus is. So we can see this is for America. Unemployment is nearing Great Depression levels. Here's how the eras are similar or different. And we can see there's a quick understanding of what happened in 2008, what our initial claims are for unemployment. Real quick, going to go over them. Record drop in retail sales. We see this was 2009, the financial crisis, and obviously this is pretty unprecedented. And if we go to I believe this is unemployment levels or unemployment rate. This is the Great Depression right here, and then we had the World War, and then pretty steady. This is obviously the highest we've seen since the Great Depression, but because it is self-inflicted, some people are saying it's not nearly as bad. And we see this is the employment population ratio. We've been talking about this. We've made a TikTok about this as well. And we can see the peak was in 2000, and we're now at, let's say, 51.3% of the population who are eligible to work, who want to work, are actually working. So around 50%. Huge difference. And obviously, we can't miss this. George Floyd's death obviously stirring a ton of people to stand up for what they believe in. Obviously, I completely agree with that. I do agree with the peaceful protesting that is taking place around the world. But a lot of people are really taking it too far. Rioting, looting. I'm sure if you've been watching the news, you know all about this. But I think this is going to be extremely bad for the COVID case, the COVID worry, because obviously people don't really care at this point for social distancing. They're really just destroying cities like it's like the purge almost. It's unbelievable seeing some of the videos and content that's coming out of it. And we can see, I think it might be in the next post, but basically, yeah, in summary, there is cities all over the United States that are kind of going insane. Like there's rioting, there's people looting. I completely agree with the whole idea of Black Lives Matter, standing up for anti-racism and all that stuff. I completely agree with it, but this is pretty insane. And we can see in China, U.S. protests is a hot topic in the state. Chinese state media is giving extensive coverage to violent protests in rolling cities across the United States, rioting cities across the while the unrest is also featured widely in Chinese social media. So this is creating not tension, but a understanding in the Chinese people that America is kind of deteriorating as being the number one country in the world in many aspects. We see the number one thing they want to show is that the Communist Party is doing a better job in terms of fighting the COVID cases and managing society. It's the main message. The US is not doing good. So, as a country, there's definitely tension regarding the relationship between America and China, and Trump saying it's the Chinese virus, going and expressing his beliefs, whatever they may be, in a bit of a racist way, obviously doesn't give a positive light in the relationship between China and America. And then we also see Chinese people are also trying to create this image of America's kind of not doing a good job, they're deteriorating, they're weakening, and it could be China's time to stand up, be first on the totem pole, and to take out that lead country that they've been kind of been under for many, many years. So obviously not going to be exactly coming into fruition. I hope not, but it's still a worry that I have because of the tension of geopolitical worries. When one country is first, they're deteriorating, they are weakening, and then the number two is strong, they're powerful, they have the opportunity to seize. What do you think is going to happen? That's kind of my biggest worry in this whole situation. But that is for another time. We'll see how it goes. I'm not really going to be... hopefully, I'm not going to be anything... I'm not going to be related to anything that's going to be coming in like a war or anything, but who knows in this crazy world. So let's go into the markets now. Let's go into the price action. First thing we're going to do is actually look at the DXY, which is the US dollar index. I think this is a pretty good place to start because we do see the dollar weakening against a lot of these major currencies, as well as even minors and exotics. So this is representing the US dollar compared to a lot of major currencies, mostly the euro. It's 60% euro, I believe 15% GBP. There's some yen in there as well. The main currencies are comprised within this index. So we can see after this squeeze to the downside, let's quickly get our snip. So let's get the snip right here. And also, if you have any questions, drop them in the comment section below, and we'll be sure to answer all those questions. So this is the strength of the dollar compared to a lot of major currencies. And there was a nice sort of squeeze that appeared here where we got a series of lower highs and higher lows. And we inevitably did break to the downside, breaking our minor level of ascending support and also our horizontal level of support right here. So the momentum is definitely to the downside, which is good for basically everything, for commodities, for crypto, for FX if you're trading and trying to have positive carry trades and make money while you are in the trade. A very weakening dollar is great because then you can long more exotic pairs like the Mexican peso, the South African rand that have higher interest rates, so then you can actually make money while you're in the trade, while your P&L is going up as well if this trade does come to fruition. But in terms of DXY, we do have a pretty strong level of support right around here, sitting around 96. We've seen that level of support hold multiple times, so there is going to be some level of support in my personal opinion. We have been consolidating sideways for a while, and we're still in that consolidation. We're range bound from our resistance and our support, like we can see right here. So we're still in a sideways consolidation, and I'm going to treat the market as such. I'm not going to assume that we're going to go into a major bearish move to the downside, gaining significant momentum. I don't think that will happen just yet, and we do have to keep in mind if there is any worry of a market crash, not just in the equities market, but if you get a major market crash in commodities, if you get the whole liquidation event that occurred like last time within stocks, commodities, crypto, all across the board selling off, the US dollar will rise compared to other currencies because this is a world reserve currency and people look to go into the dollar when there is worries in the economy. Like we've seen last time, when there was that big sell-off, where did everyone go? Everyone went into the US dollar. That's exactly what happened. And then we consolidated, making lower highs, higher lows, squeezing the price, and then we just poked to the downside. So right now, the dollar is weak, which is great if you're in crypto, commodities, if you're trading emerging or minor currencies that obviously have a little bit more volatility, but that's basically my viewpoint of the DXY. I think we will have some sort of support hold like we've seen, that slow grind up, but in terms of what's happening right now, the momentum is definitely to the downside. We do have a squeeze, push the price below a support, indicating that the bears are in control of the US dollar right now. Now let's look at some indexes. This is going to be 4 different indexes. We're going to go through them one by one. Not really going to look at the VIX, which is a volatility index, but we will look at the Dow Jones, SPX, or S&P 500, as well as the Russell 2000, which is a small cap index. So this is first the S&P 500, and let's just take a picture of it and talk in a little bit greater detail. I'm going to get some water, and let's continue on with the analysis. All right, so first things first, the next major target that we're looking for is around 3,100. We see initially it was a support turned into a major level of resistance at this double top. That's going to be the next major zone for a key level of resistance. But at the end of the day, we got a nice squeeze here, like so, and this is that move up from that squeeze, and the $3,100 is going to be the level of resistance, and it's just continuing to go up. Pretty unbelievable. We see obviously with the unemployment, with the job losses, with the riots, with COVID, with the lockdowns still in place. Yes, some businesses are opening, but look at the rate of return for customers. It's not there. You're not seeing a huge eruption in increase of retail sales or restaurants or bars or entertainment. You're not seeing that. So in my personal belief, it doesn't make sense that this is going up, other than the fact that Federal Reserve is providing liquidity into the market and the money has to go somewhere. And it's not just the Federal Reserve. It's banks, central banks around the globe that are printing native fiat currencies, and then they have to put that money somewhere. And the S&P is a pretty good place to put it, if you ask me, over a very long period of time. So we're seeing the S&P recover pretty quickly, going way above that 61.8. This was at 61.8% level. That's a very important level for the fibs. And now we broke above it and now holding it. This is now in a territory that has not been seen in a lot of the different recessions. In 2001 and 2008, in 1929, in 1969, all these recessions in America, you had this 61.8 hold every single time. Now, there was a little bit of wicks to protrude out, but at the end of the day, you saw supply at this zone. Right now, you saw the price break above that zone, so it's going to be different than a lot of different markets, probably because the Federal Reserve is putting so much newly printed money into the market. It's distorting the price action to some degree. Not really the price action, but it's distorting the true equilibrium between the buyers and sellers by creating an artificial demand within the market. It's not a true free market. That's basically what I'm saying. But you got to play with it. You got to live with it. Basically, if you want free markets, it is a rigged game because there is a buyer that can print value with unlimited quantities and purchase an asset like the S&P. So at the end of the day, it is a rigged game, but as long as you are aware of that, you could be looking for long opportunities, because with the Keynesian economists in the current government office and central banks, they're not going to have a major stock market crash. They just won't allow that to happen. There's too many pension funds. There's too many people who demand that the stock continues to rise. There is kind of that psychological, not hack, but if you are wealthy on paper, via stocks increasing, you'll feel like you want to spend more money, which is overall good for the economy. So there's incentive for the stock market to be artificially bubbled up. Just something to note. This is the Dow Jones. We see that it did break the 618. It was right around here. It was a pretty good solid break of this key level of resistance. Nice retest for a new level of support, and it does look pretty bullish. Pretty crazy to say. I'm personally not really looking to long indexes just because it makes absolutely no sense and it's unjustifiable, in my opinion. And the only way to justify it is, hey, the Fed always have my back. That's an extremely dangerous game to play, and I don't want my setup, other than technicals, to be, all right, well, the Fed always has my back, and this is a risk-free trade because it can't go down. The Fed will save the day. That is a recipe for disaster, in my personal opinion. I'd rather trade free markets that have normal amounts of buyers and sellers and aren't absolutely rigged. That's just my personal belief. I don't think it can happen forever. There's going to be a day where the dollar devalues so much that no matter how much they print, they can't raise asset prices to a point where they feel comfortable. And that will just completely debase their currency, and then some people or a lot of people will have to turn to another currency in order to hold their value, because the United States dollar is unable to do that, because the Keynesian economists will not let a stock market crash appear in their eyes. Even if it devalues the dollar to a point where everyone's poor, that is their goal in life, in my view, is recessions are the worst. In terms of the stock market, they don't give a shit about the economy because obviously the economy is in complete ruins, but they don't give a shit. They just care about the stock market and the paper value of people who are actually able to spend money. It's pretty unbelievable. But that is the current world that we live in. So that is Dow Jones, S&P. We'll look at the small caps. This is a representation of more speculative investments because it is a small cap index. You can find either RUT or RTY for the E-minis. So we can see strong moves to the upside, making clear higher highs and higher lows. Let's just see if there is some level of trend line that we can kind of create for this flagging pattern. Got a nice zone there, and then I'm sure you can get a nice ascending zone right around here. Yeah, not perfect, not ideal, but let's see if we raise that right to the wick, then that's probably going to work a little bit better. Yep. So that's the structure that we currently see right now within the market. I am definitely not really going to look to long just because I'm mainly looking at FX, commodities, as well as crypto. For my main trading, I just find that equities are a little bit too, not rigged, but I just find that with the Fed printing lots of money and a lot of liquidity, I don't have much of a fundamental understanding as to why they're continuing to move up. So it doesn't make sense to go against my bias. If the market is going down, that's another thing. My bias is bearish on equities. So I'm going to have an easier time looking for short opportunities in the equities market because my bias is still bearish. And if I'm looking for other trades, obviously commodities, FX, crypto, I'm in all those, so it's not a problem. But in terms of equities, I'm just stepping away because I don't feel comfortable trading something long when the obvious choice, in my opinion, is going to be short. All right, so not really going to look at the VIX. That's just the volatility index. Going to stick with just the equities or the indexes, I should say, for now. All right, next thing we're going to be looking at is some of the FX pairs. This is the exotics. Let's first look at a little bit more common pairs that we can see. US versus different pairs. I just like to put the US first, so then if things are going up, it is good for the US dollar. It means it's strengthening, whereas if things are going down, the US dollar is weakening. So this is a good overall analysis of the US dollar by not just looking at DXY, which is a composition of major currencies compared to the US dollar, but each individual currency that I'm currently looking at. So let's first look at the Canadian dollar. We'll go to Australia and New Zealand, and then we'll end off with the Japanese yen. All right, so with the US versus Canadian dollar, we see that we had a move to the upside after the contraction of volatility with the descending wedge. And I think that there will be some sort of continuation pattern, although right now we are getting a massive, massive push from the Canadian dollar against the United States dollar, where Canadian dollar is strengthening compared to the US dollar. We're seeing a nice descending triangle here, break to the downside, nice little test of a support, and then continuing its momentum to the downside. Surprised that there wasn't really any real retest here. I guess you could call this a retest, but I definitely thought there was going to be some level of a retest at 0.1388. But the momentum is really strong. The bears are really strong in this chart, or you could say the bulls for the Canadian dollar. And overall, the United States dollar is weakening across basically the entire FX market. And I don't really have anything to do right now. I was just waiting for that squeeze, and it came out to the downside. And there's definitely some strength in the Canadian dollar. This is the Australian dollar versus the United States dollar. We're seeing after that huge spike in the US dollar when we had that liquidation event, the Australian dollar has come back quite strong compared to the American dollar and gaining ground really, really quickly here. We can go all the way back to the daily, and we're basically covering all the ground it took away in that huge pump and then some, basically. And then we see a possible key level of resistance at around 0.142. We'll see where it goes, but right now the United States dollar is definitely weakening compared to a lot of different currencies. Australian Canadian currency, the Australian dollar, Canadian dollar is heavily tied to commodities, and commodities overall are doing really well right now, so it makes sense that the United States dollar is weakening compared to the Australian dollar as well as the Canadian dollar. Makes a lot of sense in my view. But there's, in my opinion, still a worry if there is a liquidation event, if there's a lot of economic uncertainty. At a certain point, I think people will go back and flee into the US dollar, which would be a huge shift in momentum. All right, so this is the US dollar versus the New Zealand dollar, or the Kiwi, you can call it. Solid structure that I personally see. So let's even take it back all the way to the daily. In my personal belief, this is extremely bullish as long as it holds above, let's say, 1.6. That's going to be the main level of support. We had a nice consolidation. Initially, we had a squeeze to the downside, creating a descending zone like that. And then we created a strong push to the upside, creating an ascending zone within the previous resistance, creating an ascending triangle pattern. We broke above the ascending triangle pattern, above the resistance, above 1.6, indicating that the bullish push has commenced. That's that initial impulse push. This is now the contraction and the consolidation before potentially the next expansion phase to the upside. That's going to be the way I'm viewing the market. So let's look at the daily. We see the expansion phase, the expansion in volatility, the impulse push to the upside, and we're going to be looking for the pullback. This is that pullback. This is that contraction in volatility before we get a next expansion phase that's going to push the price up even higher, weakening the New Zealand dollar and strengthening the United States dollar. So that's going to be my view of the market. In terms of the smaller time frames, we did see a little bit of a poke out above the key level of resistance, which is not ideal. I would like to see all this resistance get held, but unfortunately that did not happen, although this is a still respected zone, so I did put that within the chart, although we do have to consider that it's not as valid of a zone. So in terms of the US-New Zealand pair, it looks pretty bullish, and the key zone that I want to see the price hold is around 1.6. But right now, there's nothing to do within the FX markets, for me at least. I'm just spectating on most of them, looking for mainly the fundamentals to change, where the US dollar will gain strength due to the dollar milkshake theory. If you're an emerging market business owner and you want to transact gold, silver, coffee, soybeans, oil, whatever commodity, you're going to want to do it in the United States dollar. So, in my opinion, there's going to be a lot of demand for dollar, as well as all the dollar-denominated debt. A lot of D's there. But yeah, but there's a lot of dollar-denominated debt in foreign countries, so it's a huge short position. A lot of companies are short the U.S. dollar. They have to borrow it, and if that U.S. dollar increases, they have to pay higher amounts for that US dollar in order to pay it back. So there's a huge short squeeze, and I think it could turn really ugly if the United States dollar does rise. So now we're going to go into more of the exotic minor pairs. These are less traded pairs basically altogether. They do have either positive or negative carry costs. Look into them if you are trading FX, and if you are trading a pair or a currency that has a high interest rate. That is something that you do have to consider. For example, Turkish Lira has like 10%, South African Rand has like 6% or something, whereas the US dollar has a very low rate at 0.25. So understand the carry costs that you are taking on when you are in these trades, especially if you're holding them for a long period of time. They do add up. So this is a South African Rand. Let's go back to the daily here. Initially, we got a huge move up where the South African Rand got a lot of value taken away. Huge debasement here against the United States dollar. And now we're seeing some correction. We did get a very nice squeeze where we saw an ascending zone squeeze against a descending zone, and the price inevitably pushed to the downside, breaking the support. And now at around 1728, it does look like it's potentially holding a nice level of support. We saw a lot of transactions take place at that 1728 zone. So we do see that there are a ton of buyers around this zone. Something to consider. Also, there was a previous level of resistance turning into a new level of support. And we can see it was the high, although we do have to kind of take that with a grain of salt because the wick was so large. But that was kind of the high back in 2016, which could possibly be the new level of support for the current price action. Now bringing it down a time frame in the 6 hour, I think let's just go right to the 4 hour here and take a little snip so we can talk about the current price action in a little bit more detail. So we got this squeeze right here. This was that squeeze that we were talking about, where it inevitably broke to the downside, but we do see that there was a contraction in volatility, and this is the expansion phase in that volatility. And in my opinion, we're potentially getting a contraction in volatility right now, where this is our new potential pattern, where this was initially a descending wedge that was really poorly drawn. Let's just draw that yet again with one single clear line, like so. And that was the structure of our trade. We inevitably did break to the upside, but the price was able to hold below our key level of previous level of support right here. New level of resistance, new level of resistance. So right now, what do I currently see within the market? We were in a downtrend because of the push from the triangle, and now we're in a series where we can't make a lower low or can't make a higher high. So we're right now in a very, very tight consolidation right here. What will I be looking for in order to potentially shift my bias into a bullish case for me to potentially long? Well, what I'd like to see is a break in the resistance right here, potentially hitting the new level of resistance, which we saw right here. And we can see it's a very well-respected pattern throughout the structure. Probably we will get it hit to around the 17.86 range. And then if we get a retest of the previous resistance, which will act as a new level of support, that will be my indication that we'll be looking for potential reversal. So what we're going to be looking for, this could be a double bottom, and then we could break up, test this previous resistance as a new level of support. Once we've got that validation and the confirmation that there are buyers within that zone, that's going to be my entry zone for this trade potential. We do have to consider that there is a descending zone connecting the lower highs, still squeezing the price, so the entry would be probably here. You have to consider that there's going to be a key level of resistance somewhere around there, but those risk rewards are pretty good. You could tighten it a little bit more, so maybe you got a 2.5, 2.8, maybe even a 3 risk reward. Nothing really under 2 I'm going to be interested in, but that's going to be my key takeaway is going to be this confluent zone right here, and then you got a nice entry area right here. If it does break to the upside, and this is your high or low, and then your stop loss would be here, your take profit would be somewhere around there. A little bit over 2 to 1. We'll play it out a little bit as time goes on, as this continues, but that's going to be the structure that I'm going to be looking for, is initially a break in the structure to make a higher high. We're going to be looking for that higher low, potentially an ascending zone right here as well, squeezing the price closer to the apex of the pattern. That would be a really good reversal, and that's really only going to be what I'm going to be looking for. If it continues going this way, I'm not really going to be looking at the market, because it could just continue to dump down that way. That wouldn't really be something that would be optimal for me. But we'll see how it goes. If there's a nice descending zone like this, and then we're able to hit this descending zone a couple more times, and then we break to the downside, retest, and then we get some consolidation with some rejections that there's sell pressure here, that could be an opportunity if we see the US dollar weakening even more, because of the fact that you could get some positive carry. You could make money while holding on to the trade, and if it gives you some profits due to the depreciation, that's even better. But you can make money shorting the US dollar and going along the South African rand, basically. So anyways, that's going to be the structure for this particular FX pair. Not really going to be looking at it too much, but this is probably the closest one to a possible entry that I currently see. Let's look at the peso next, and then go on to the ruble after that. It's pretty similar structure to the South African rand. We got a huge move to the upside, descending zone creating our structure, and I don't really have anything. This is just something that I'm putting on the back burner. I don't really have any interest in trading this just yet. We did get a nice squeeze here, and then this was a pretty solid impulse push to the downside, and now we are just consolidating at this potential level of support. And I don't really see anything that I have a lot of interest in. It's just slowly consolidating. Once we see a nice price action pattern here, that would give me a little bit more detail as to which way we want to go. But right now, we don't really see anything worth doing as of yet. All right. So that's the Mexican peso. Ruble is going to be next, the Russian ruble. So the Russian ruble, in my opinion, is in a very, very tight consolidation of a descending wedge. We did break this level of support, which I'm a little bit surprised about right here. That would have been really nice to hold, contract, and then have a swift move to the upside. But we're still falling, still going below our supports here, our horizontal supports. So I'm just going to let the price action play out. If this does melt to the downside, not really going to be looking to trade it, because my bias is going to be looking to long US dollar as of right now. It could change, it could shift. If I am looking to short the US dollar, I will be looking for another pair, not the Russian ruble. It'll probably be something along the lines of possibly the Canadian dollar if it does retest at 136. Not really something else. I think another one could be the South African rand if it does go below 17.27, but the Russian ruble is kind of like a only long opportunity that I currently see right now. If it does move to the downside, it could melt all the way back down, but I just don't really feel comfortable doing that just yet, in my personal belief. All right, Turkish Lira is the last one. We see that previous level of resistance on the 2-day is now going to potentially act as a nice new level of support, although right now we're just in consolidation. It does look like a potential reverse head and shoulders with the left shoulder. If we do get another right shoulder, that could be a reversal, and then a breakout of this zone would be the thing that we're looking for in order for us to potentially look for a long opportunity, because this is a reversal pattern. Something like that. Right shoulder. You could have the risk at the right shoulder or at the head, and then probably your take profit for the first one is going to be something like this, although you could just make it a little bit more symmetrical. Not really of a great take profit here. It's pretty weak unless you're wanting to have like a really, really small level of risk. But at the end of the day, not really looking at Turkish Lira, just understanding the US dollar against many of the different currencies that we are analyzing right now. So in my personal opinion, the South African rand is the only real one that I see that has true value for a potential trade. I think the other ones I just look at in order to gauge what the other emerging or exotic pairs are doing. And then this is a little bit more of the minor or major pairs that we can currently see. So right now, nothing really to do on the FX markets. We do see that the US dollar is weakening, which is good for a lot of the asset classes that we do like to trade in. But right now, the Canadian dollar wouldn't look too bad for a nice little retest if it does go and create a little wedge here, using the previous resistance yet again as a new level of resistance. That would be good. But for now, we're just going to be spectating in the FX markets. All right, so that's going to be that. Let's just bring the DXY in so we have a good view of it, and we'll see if we can go to the smaller time frames, seeing how it is doing. All right, now we're going to go on to the metals here. Super exciting stuff that's happened. I think we are going to do palladium and platinum first because I entered them and they're looking pretty phenomenal. First things first, this is palladium. All right, so we've been talking about palladium for a while. I'm going to mainly stick on the smaller time frames just because we've already gone over the large time frames so often. But in terms of the actual structure that we're trading and the setup that we are trading, this is the setup. We already know that we have a major squeeze here, and then this was a major impulse push, a expansion in volatility, and this is now the contraction and volatility yet again, where we see a squeeze happening. And right now we did get a break of the resistance. We got a little fake out right here, and then we pulled back into it, but we were able to hold this nice little support. And then now it does look like we are breaking out. The major level that I do want to see the price break is this zone right here, 1960, right around there. Previous level of resistance, previous level of support, previous level of support, resistance, resistance, resistance. So we know that there's going to be a lot of supply at this zone. If it breaks above this zone, which it looks like it is right now, I'm definitely going to, well, I've already entered, but I'm going to get adding a little bit more, and we got our major level of take profit here and here. So in terms of the structure, it does look really good, and let's just zoom out a little bit further to see why this is such an important squeeze. So we got main squeeze here, expansion volatility, we got a minor squeeze, and we are even holding this ascending support. First touch, second touch, third touch. It is looking like a pretty good place for a lot of demand to be located, and we got some pretty conservative potential take profits. And then if it goes beyond, we got some major ones, but I'm going to be pretty conservative and just use simple geometry to understand where good risk reward parameters could be located. And that's going to be my overall trade, basically. Palladium does look really strong. We've already covered it. We already talked about palladium versus platinum, understanding what potentially drives the market, and overall, this does look pretty bullish in my view. So yeah, that's going to be my first trade. And then platinum is going to be my second trade. It shot up a lot since the entry here. A little bit surprising. Almost got taken out here, but pretty lucky on that one. And let's zoom out a little bit more on this as well and understand where it's been, where it could be going. So we already talked about palladium. This is platinum, a different metal. This is used in diesel as well as jewelry, whereas palladium is mainly used in gas catalytic converters, and this is just diesel catalytic converters. So also we already see this descending zone and this descending zone as well. This is creating a nice wedge, squeezing the volatility into a funnel, and we're looking for that expansion in volatility for us to be looking to make money on. And this is exactly what we got. We got a break to the upside. We got a nice ascending wedge right here, or an ascending not an ascending wedge, an ascending triangle. That was the structure that we had here last night, and it looked really good. It did break to the upside, a little bit of a fake out, but that's okay. This was a little bit worrying for sure, to say the least, because that could have definitely taken you out on your stop loss if you put it too tight. But we do see, let's just zoom right in, after this major wedge broke, you got a nice ascending triangle here, broke to the upside, could not hold the retest, broke down, came back down, huge wick, huge bullish engulfing candle, engulfing all these previous candles, and then we got the blast off to kind of commence the momentum to the upside. So it was a little bit noisy here, a little bit unclear with some breaks of supports, some wicks down. But at the end of the day, after this big candle, this big green bullish candle, that should be the indication that yes, we have now broken out. And now the momentum is to the upside, the volatility is expanding, and we're making money. And we got our first major zone there and second major zone there. So yeah, the two metals that we talked about, palladium, platinum, do look really bullish. I am long on them, and I am definitely looking to make some good profits. And that's basically the structure for the two metals that we talked about, palladium and platinum. Now this is palladium versus platinum, and this is just the chart that I have as a comparison. We can see that palladium has been dominating versus platinum for a very, very long time. Since around 2016, palladium has been exponentially increasing while platinum has been getting destroyed by palladium. And we can see it does look like it could potentially reverse, which would be very bullish for platinum. Not as bullish for palladium, but definitely something to consider. We did break this minor level at around 230, and now we're just consolidating. If this does turn into a nice level of support, it could be a very well-rounded bottom, and it could create another push here, which would be bullish for palladium compared to platinum. And it's just something to look at. We can see that the bullish push in platinum compared to palladium did make that chart go back to the downside, hitting the very low of the support. So if this does continue, where platinum is more bullish than palladium, we will see that support fail, and we could see a significant push to the downside on this chart. Alright, so that's going to be palladium and platinum. We're now going to look at gold and silver. In my opinion, it still looks really bullish here. Let's first look at gold and then jump into silver afterwards. So this major squeeze, we got breaks to the upside, and then we got another contraction of volatility where you got a nice descending wedge here. A little bit of a worrying part where the support was broken for a short time right there, but the buyers were able to push the price back up above this ascending zone, and then it's looking really good now where we've broken this minor level of resistance, and now we're holding for a new level of support. So it's looking really bullish for gold in my opinion, after we were able to pull back and go back into the ascending zone, especially when we broke this descending zone, and at last when we broke this horizontal zone and confirmed that it's a nice new level of support, breaking the market structure. That is the kind of final zone that I'm going to call it a hesitancy area, and now this is in a bullish momentum towards the upside. So I'm very bullish on metals, on gold, on silver, on both of the metals that we talk about. In terms of trade, I did not enter this. I was looking for something a little bit deeper somewhere in here for an entry. It did not come into fruition, so I'm going to be basically not really looking at gold, still in silver, so that's looking phenomenal. An option could be, if it does consolidate a little bit here, that could be your second entrance with a stop loss maybe just below here, although you are looking for that $1,785 to $1,800 for your take profit, ideally, in order to get a decent risk reward on your hands. Maybe looking at a 3 to 1, 2.8, 2.5 to 1 risk reward. That would be pretty good, and that would be a trade worth taking. But if you're to take profits at like 1760 and your risk is here, obviously that's not going to be a very favorable risk reward situation. So it's just a matter of how bullish do you think gold is going to be in the short term, which I think it is going to be bullish, but it hasn't been as active, it hasn't been as bullish, it hasn't been as aggressive towards the upside than some of the other metals that we are looking at, like silver. And we've picked silver instead of gold because of the gold and silver ratio dropping exponentially, going into our ascending wedge, which we won't really talk about today. But let's just talk about silver. Let's talk about this huge move that appeared on Friday and then over the weekend. We saw that this was the structure that we did trade, and then we got around 1740s right there. And then now we're making a strong move towards the upside. Very similar structure to a lot of the things that we do trade. This is a symmetrical triangle with a squeezing descending zone and an ascending zone, bringing the price towards an apex of the pattern. Once it has a huge bullish engulfing candle, that is going to be your signal to be looking to enter for a long. But we were anticipating it right here. We also did see that nice rounding bottom, and you could get a little bit more aggressive with the trend line and get a trend line here. That's what we drew, and that was our initial break and then we entered right around here, and then we got that move towards the upside once it broke that final descending zone. And the target's around 18.5, 18.6. I think that's where the next key level of supply is going to be. We can see it was a retested zone many times within the structure here. We are currently at some level, minor level of support, but at the end of the day, I am expecting it to go a little bit further up before I do take my profit. But strong, great move overall. It gapped up over the weekend, and it is holding strong. So that's going to be my analysis of silver. And let's quickly look at oil, both Brent and crude. Not really going to touch on it too much because I don't trade oil, but it's just something to consider, something to know about. So this is dating from basically March of 2020. We do see that oil has been actually increasing quite a bit, and it's almost, or if not, has hit the bottom of the gap down initially that kind of commenced the whole sell-off for oil. And this is going to create a very strong level of resistance. On WTI crude oil or Western Texas Intermediate, it's around $35. And on Brent, it's around $38-ish for the key level of resistance. And if it goes beyond that, that's pretty phenomenal. There are talks of the economy opening up. That means there's more people driving, there's more people transporting goods and services, making things out of products that use oil. Obviously, with the economics increasing and the overall activity of an economy going up, there will be more use of energy like oil. But right now, the globe is pretty well still halted to some degree. It's not like it was in January or February of 2020. Definitely not yet. So I think there's still a worry and a potential for a sell-off, but I'm not really trading oil. I'm just analyzing it to get a good understanding of the main things that are impacting the global macro landscape. All right, so that is gold and silver. In my opinion, those look probably the most bullish, and we will do cryptocurrencies in another video. But that's going to be my global macro update. In my opinion, metals look really, really phenomenal. Palladium and platinum look really, really good. Obviously, platinum had a huge push to the upside, and pretty happy about that. But overall, palladium and platinum, in my opinion, do look pretty bullish, whereas gold and silver kind of have already made their moves. I think it's a little late to enter silver, just because we've already made basically the meat of the move, and entering now you could, but it's going to be less of a risk reward, less dependability compared to entering at the break of the pattern. I think Palladium is still definitely a decent entry with solid risk reward parameters. If you are looking at anything, I think that would be the most the best risk reward parameter that I currently see in the market right now. If you're going to be risking anything, let's just play around with this a little bit more. So how do I find my take profits? What is this? From the breakout zone, that's going to be the first take profit right around there. And then let's just draw in another one. So we're going to do 2 take profits, and another one's going to be like this. So like here. So there we go. That's going to be my 2 take profits. Let's see how that risk is. And looking at that risk reward, I'd like to ideally see at least 2 or more. So if we put the stop loss below that wick, just below that wick, and let's just say we enter right here if you are. I'm just playing around with risk rewards so people understand how I like to view risk reward, because this is very important. Risk reward is very, very important in the markets. If you don't understand it, you definitely should. So we got 2.28 for the minimum. This is kind of the minimum I'm looking for, which is a pretty good risk reward. You know, anything over 2, I'm pretty all right with. Anything over 3, I'm really happy with. And then the second one that we could be looking at is 3.5 if we enter here with the risk setting just below that wick. So it's looking pretty good. Definitely something to consider. This is probably the most actionable trade that I currently see within the market. I think that platinum is a little bit too far for anyone to be entering. Break would be the best situation, and then having a stop loss below the low could get run by this, so you do have to make sure that it's still decent. That happens, you know what I mean? Like, let's say if you did enter yesterday and you entered on that nice little retest or whatever, and then you entered your stop loss just below those recent lows, they would have got stopped out, right? This wick would have stopped them out. So it is frustrating. I definitely understand if you get stopped like that it's not fun at all. But if you see the type of reward that you're able to get, you're not looking for those 15 risk rewards, 10 risk rewards. That's just too undependable, or it lacks in dependability and being able to actually execute them all the time. So if you're trying to gauge, take profits, or zones that can provide you a potential level to take some profit off the table, I think using this geometric way of finding profits and finding targets is a decent way to go. Also, just simplistically, very simply, I guess you could put it, using just the size of the triangle like this, and then just going like this works as well. Or just looking at key levels of resistance and support works as well too. But yeah, that's going to be my overall analysis. Let's just see what the 1 hour is doing on here. And it's over the zone. Not consolidated too much, but we do see that there are wicks, support. Now it's retesting because it broke to the upside, I think, and we could see a nice little retest before another move up. Now, I don't really like going on the smaller time frames. I usually like to stick to the 2 hour, 4 hour, and above on Palladium and Platinum because the spread's a little bit bigger, and you just have to keep that in mind compared to gold and silver. So that's going to be the gold macro update. If you have any questions, drop them in the comment section below. We will be conducting a crypto market update today as well, but that will be for a different time because I don't like kind of going in crypto as well as global macro, although they are pretty intertwined. I like to keep it somewhat separate for the viewers to look at. So thank you very much for watching. I'll answer all the questions in TikTok and YouTube, and until next time, have a good one, folks.